All right, gang. Welcome to Charts and Coffee. I think we should be good to go. Let's get a quick audio and video check in. All right. Happy Wednesday, everybody. Good to see you all. Thank you. All right. Good to see everybody. Welcome to our Wednesday episode of Charts and Coffee. I'm actually rocking some water this morning. Went through the vat of coffee already. Good to see everybody. All right. So let's get to it. First place we're going to start off with is the calendar. We alluded to the calendar yesterday when we talked about the FOMC. One of the things I talked about yesterday, even though we had a lot of volatility on the intraday timeframes when we were discussing what the market typically does in front of FOMC, it looked like the market wanted to head lower. And frankly, again, probabilistically, we're talking about the 24 to 48 hours, or call it the session before and the session of up until 2 p.m., you're better off looking to the long side in front of FOMC events and looking to the downside after. Now, if there is timing for the long, yesterday, today, and then if there's timing for the short, it'll be right around 2 p.m. So keep that in mind. Now, I had a few folks ask me yesterday in terms of would that be a hedge? And no, I don't. A, I don't hedge, and B, that would not be a hedge. That's just timing in terms of what we typically see after an FOMC event. And where I really am wanting to be opportunistic about if we get a post-Fed triggered pullback, and that's all that it would be, gang, a pullback, we'd be lucky. I'd be absolutely joyous to see the 21 EMA on the Dow. I'd be absolutely ecstatic to see the point of control or the 13 EMA on the Russell. So when folks ask, would you short? Maybe as a day trader, maybe some puts that I would buy into the strength this morning that I could take advantage of the rollover. That's one way of looking at it. What I'd like to do is take advantage of the movement lower. And I just would love to see those levels specifically in those two markets. Okay. So when folks ask, where's your focus? That is my focus. Same idea we had yesterday. Use the probability of the market rallying in front of the Fed up until about noon to 2, where the market realizes, hey, we're in that window where if we're going to roll over into the rate statement and then into the presser 30 minutes later, this is the window. So that's something to keep an eye on. And, Chris asked, in light of that, is that a buy the rumor, sell the news? Yeah, we were actually talking about that, Chris, in the chat room yesterday, where we called it buy the Fed, sell the Powell, or buy the Fed, fade the Powell. It's not personal to Powell, whoever the next chair is, substitute their name. It's really buy the Fed, sell the chair. When the press conference starts, when the details about what details are we talking about? These are the details that I alluded to yesterday, which is what is the plan for the Federal Reserve's bond buying program. And that's really what the market's all ears. Because if they continue to buy the longer term treasuries, that will drive investors and traders, investors mostly, to corporate bonds and into the stock market. So if they keep that buying program going or ratchet it up, continue to expand the Fed's balance sheet, buy stonks. I mean, that's what we're talking about. So yeah, I think short term, Chris, that's the setup. Longer term, I'm still very much a bull. Anything that we see as far as a pullback specifically in the Dow and in the Russell for me is quite opportunistic. And, let's talk about the degree to which we have been pulling back. Sometimes at 13, sometimes at 21. Those are very shallow retracements. So not something I'm interested in shorting at all, at all. Got a question about the XLY reports that retail sales declined last month. So the first thing we can look at is the XRT ETF. And then you're right, can we look at XLY? Well, again, Anthony, thank you for the question. So if I'm looking at XLY, if I'm looking at XRT for that same narrative in terms of the retail sales reaction. So this is where this is data, which is volatility. And that data is occurring within the context of an established, in this case, as you can see it on XRT, double green, uptrend. Take a look at XLY, double green, uptrend. This is exactly what we want to see. Much like, Anthony, this is actually much like the Federal Reserve potentially, if they don't have as clear a communication about the ongoing bond buying program, we could see a weakness in the equities markets triggered by that. Well, in this case, if I'm going to see some weakness triggered in XLY, XRT, individual weighted names within them based on this retail sales number, that's fine. That's going to be an opportunity to get long. Let me talk about another opportunity. One of my favorite things is downgrades. I love seeing downgrades. I love when some bank, and I'm not going to pick on any one, they're all chuckleheads to me. When any particular bank has a downgrade, here's just a general list of some downgrades. I love downgrades if they're happening in really good uptrends. So that's the volatility component we're talking about, whether it be the Federal Reserve, whether it be retail sales, whether it be a downgrade. I want to get opportunistic in markets where that news would shake it up a little bit, send the market to a retracement, and then engage it. So something to think about. I like that a lot. All right. So next up is, can we take a look at Overstock and Walmart? Sure. Okay. So let's talk structure. The only thing vaguely interesting about Overstock to me is not the structure, but where it sits right now on the chart. This is a sideways market. And then it's also hovering right around the VWAP that's anchored to the first of the year. So that's a volume-derived support level. And it's also getting very close. And it's bounced off this level before, the 200-period exponential moving average, which is represented by the white dots of the propulsion tool that's on all my charts. That is a price-based level. So I've got a volume-based support level. I've got a price-based support level, and both of those could be very good oversold buys to set up Overstock. Now, am I going to prioritize a yellow wave market? Not typically, gang. I'm typically not going to prioritize a market that's not trending, although this one, Pablo, this one's sitting at some very interesting levels in terms of if I wanted to be long. In terms of Walmart, here's another yellow market, but it was green. So knowing the history of the underlying market trend is very, very important. Let me show you how important it is. And one of the mistakes that a lot of traders make, it's a lot of error in understanding market trends. These pockets right here are very dangerous for traders who believe that there's only two types of trends, up and down. And that's actually partially correct, or it's partial, it's mostly wrong. And here's why. Because there's actually four market trends. Charles Dow talked about this 140 years ago. I like to emphasize the 140-year thing because it just goes to show there's a lot of stuff in analysis that came far before computers and far before high frequency and far before systems and algos and all these things that described how the market behaves. And so they talk about Walmart. It's interesting that it's recently transitioned into chop again. So it's not a trending market, but it sure as heck isn't short. So I would be looking for a buy. In fact, I believe on this one, I am already long. Last little swig of my Ethiopian brew this morning. Okay, so Yeah, I like Walmart. I like Walmart to the long side. Yeah. Because I want to respect the trend that was. And look how many times if traders went reversal and here and here and here, they just got demolished. And that's what I mean about probabilities. This kind of reversal or this kind of reversal is not, well, it's not a natural state of the market. That's not really natural for the market. If the market's going to reverse, it's going to usually go into distribution and then it's going to reverse. This kind of reversal, again, in this kind of reversal, not a natural state for the market. Okay, so going back to that, I only know three. Well, there's two kinds of sideways markets, right, Michael? There's two kinds of sideways markets. So that's why we say four. This is all going back to Dow theory, Charles Dow, late 1800s, early 1900s. And that is markup and markdown. You're right. Sideways comes in two flavors. We have sideways with sprinkles. We have sideways without. What is this? What I mean is we have congestion markets, which is a wide sideways market, and we have a consolidation market, which is a narrow sideways market. So just like we have two flavors for trends up and down, we have two flavors for sideways markets, choppy and consolidating. You can call it narrow channels and chop, however you want to look at it. But yes, that's the fourth, right? Two sideways markets. So thanks for asking. Those are the four types: up, down, chop, and consolidation. All right, so next up is, and by the way, one of the things that we emphasize in any kind of trading that I'm doing, I do this in the sector secrets as well. One of the things that I emphasize in prioritize, kind of going back to Michael's question, prioritize the uptrends, gang. Yes, there's four types, and yes, there's a tactic for each, but prioritize the uptrends, prioritize the markets that you will hear me refer to as double green. Mark says I'm going to be sitting on my hands until the FOMC, and I think there's no problem with that. I'll be looking for some potential day trades. We day traded the RTY to the long side yesterday. Gang, I cannot emphasize enough. I think this is relevant anytime, but it's especially relevant these last couple weeks of December. And that is, and I would hate to make it sound as if it's only this small bubble in the calendar that I would tell you to do this. I do this anyway, but it's most especially important. Be a sharpshooter, be selective, be a big league hitter, pick your analogy. Don't recklessly, randomly, actively just fire off trades. I think we should do this anyways, 12 months out of the year, 52 weeks a year, which is be very selective about what we actually enter. I think a lot of times, if James Bond has a license to kill, day traders seem to have a license to overtrade and justify it because that's what they do. They trade. And golly, gang, I could not disagree with that more. In fact, when I'm working with day traders that are struggling, the first thing I'm usually going to ask them, first two things: what time frame are you looking at? And I'll usually have them shorten the time frame. The second thing that I'll ask is, how many trades do you, on average, put on every day? And I'll get a number. Usually, it's somewhere over 8 to 10 trades, round trips per day. And so the two things that I'll tell them to do is you can only trade the first 120 minutes after the bell. And if you've been trading 8 times a day, you're now allowed 4. If you've been trading 12 times a day, you're now only allowed 6. If you trade 4 times a day, now you're only allowed 2. I cut the trading in half. This is an old editing trick, the rigors of which I was put through writing 3 books. And the editor would basically say, imagine taking 50% of your text out of whatever paragraph you wrote or whatever chapter you wrote. And that was brutal, but it was a really interesting exercise. And it makes you choose your words more carefully, emphasize your ideas more clearly. It's very difficult. I had a terrible time with it. But carry that into trading and ask yourself, could I cut 50% of my trades? Now, granted, this is only if you're not achieving the kind of results that you'd like. If you're doing fine, hey, welcome. I'm happy to hear it. I love that you guys are part of the community. But if you're struggling, try those. Reduce the time you're trading, reduce the number of trades. So, and focus on uptrends, gang. Focus on uptrends. All right. What are the best areas to get into on any market? TT asks, what are the best areas? Retracement areas, TT. Retracement areas in a trend. That's what I'm going to focus on. Retracements could be 50% retracements, 38.2 retracements, 61.8 retracements. Maybe you're using Darvis levels. You could be using the wave. There's a lot of different ways we can define it, but I think retracements as a larger description of what we're talking about would be the best way to look at it. So next up is, what are my thoughts on the SPY? So my opinion of any index receiving a new stock is that, Patricia, it's more beneficial to the stock than it is the index. So if we're talking about Tesla and the SPY or the ES futures, it's more beneficial for Tesla to be added. Remember, for the stock to positively influence the index, it's got to be heavily weighted, which Tesla will be. So it has the potential. Patricia, does have the potential. So it's got to be heavily weighted, and then it's got to be able to carry the index on its back based on its continued strength. Much like Tesla before it split, don't be surprised to see a pullback. Case in point, right in here. Right? Don't be surprised to see a pullback as the market was rallying this up in anticipation of the split. Here we are rallying up in anticipation of the addition to the S&P. Right? So don't be surprised to see an opportunity to buy post the addition. So it's really more a play on the individual stock than it is the broader average. The broader average only benefits if that stock continues to go up. And my expectation is we'll probably see a pullback. Temporary, could be a retracement. I think it could be a buyable pullback. I loved this pullback after the split. I bought into that pullback. That's a gimme, right? Because we know the market gets all enthused about something they could very easily buy after the split and likely cheaper. An average pullback in a stock after split is something like 10%. So if the thing that I want is going to go on sale for 10%, I'll wait. So that might be something that we could see in Tesla. So thank you for the question. Hey there, Jan. Thank you. Oh gosh, Jan, I started, it's funny. I started doing this sort of on a whim. So I thought, let's do some content. Let's talk to some traders and see, what kind of opportunities we can have in the market and look at all this stuff together. And then I just liked it so much. So yeah, I just figured I'd kind of bring you guys into welcome to my office. Bring to my office. We're at 20 minutes. We take a look at what's going on. So thank you. I appreciate your time, Jan. Thank you. Can I explain the manipulation going on with Tesla? David, I don't know specifically. I'm certain that probably most heavily weighted stocks in the market have some sort of, manipulation. I don't ever, it's a tricky thing, David. I don't want to dismiss it, but I don't want to engage in it either, because then my brain starts turning into the X-Files. You guys remember that show? I don't want to go all Mulder and Scully on the market, because then it's a very slippery slope to it's not a fair game. The odds are stacked against me. The market's out to get me, those kinds of things. Now, I know that's not where you're going at all, my friend. What's the manipulation with Tesla? My gosh. We could talk about a lot of reasons why Tesla should not be trading where it is. But look, I'm not on CNBC there to blather about things that nobody can benefit from. It's not CNBC's fault. There went my invitation. Anyway, here's the thing. If we want to talk about accounting issues, we want to talk about why most 20 some odd percent of Tesla's revenue comes from collecting credits, which is going to be an ever receding pool of revenue for them, right? We could talk about all those things, but the bottom line is they're already in the NAS. They're going to get added to the S&P. I'll just trade what I see, right? As traders, I don't want to go down that slippery slope. I totally hear the question, but I think that's a really popular one that I get asked. And my advice is just trade what we see. And for now, as long as the overall trend is up, this is a fanboy, fangirl stock, gang. Be very cautious picking enemies with a stock like this because it's got a wake of sellers, of short sellers in its path to probably 700 at some point. So I could probably think off the top of my head of 3 reasons why this particular stock should be Donkey Kong. But the reason is, the truth is, those reasons don't matter. And the market's just not focusing on those things. So I appreciate the question. Short Peloton. I'll tell you what, my friend, that's another great example of a stock that I'm not a fan of it. It's Netflix and an overpriced bicycle. I mean, really? But here's the thing, not to dog Peloton. That's not my point at all. But this stock up in this area is hilarious to me. This is a stock. Look, I joke and say with my husband every day, how the market's going. I'd say, hey, rather be lucky than good. Peloton, that should be their mantra. Hi, we're Peloton. Rather be lucky than good. I'm sure their product is fine. Everyone who I know has a Peloton, seems to like it. Most exercise bikes become clothing hangers, right? You just walk into somebody's house and the exercise bike sits in the corner with a bunch of clothes on hangers hanging from the handlebars. This one seems to have really good engagement. Here's the bottom line. Had we not had lockdown, had the gym behavior not changed so abruptly, Peloton wouldn't be where it's at. We all know that, and that's okay. So that's where I go back to. Sure, there are reasons to not like Peloton. I could reel off a 5 or 6 off the top of my head. However, they do have actually very good retention, very low turnover, and it's heading higher. So if I look at the structure of this market, despite all the reasons we could talk about the overall markets, why they should be lower. I could go into a macro thesis with you guys, which means absolutely nothing in the near term. Please don't succumb to that. Well, this is what the market should be doing type of error. Believe me, gang, I've done it. It's cost me money. All right, just trade what you see. And if the market starts to change directions, that means there's a new narrative. It could be macro, it could be fundamental, it could be technical, it could be just news and headlines, it could be a sentiment shift. But once the market confirms that there's something else being factored into price, then we can talk about a larger shift and a refocus as to why it's moving. I hope that makes sense. I hope that benefits. It's just my opinion, gang, but this opinion and this approach has kept me in the game successfully for 3 decades. And I can't say Peloton and Tesla are going to be any different than some of the stocks back in the 90s and some of the stocks in the early 2000s, where you scratch your head as to why you're long, but yet you trade what you see. And I just hope that helps. But I love the questions because that tells me you guys aren't, sheeple. And I love it. Thank you for the questions. We do not have sheeple in this room. That's for sure. Anyways, I've got to wrap up here. I tend to run a little longer on Wednesdays. Sorry about that. Don't short Tesla. Yeah, exactly. Don't short Tesla. I like trading Peloton, right? And like I said, I have friends that have them and they love them. They love them. So anyway, let me wrap up here. Do I like the Aussie? Yes, I do. I do. Not just the Aussie. So you can look at the 6N. You can look at the FXA. I like the New Zealand dollar. I like the euro. Today's going to be an interesting day for currencies. That's something that I'm going to be talking about in both the Sector Secrets and the futures room today, because I believe the dollar is going to resume its move lower. I like the euro against it. I like the New Zealand dollar against it, Aussie, even the pound, even though that's going to be a more volatile ride. Buckle up if you're going to play the pound, but short the dollar, gang. We've been shorting the dollar since before the election. I'm going to continue to look for that trade. All right. Okay. Let's see what else we have here. Yeah, gang, have a great day. I'm going to wrap it up here. Sorry for running a little bit longer. And again, be careful. We're going into the Fed at 2 o'clock. I still want to be looking long as we're going into the market. Gap psychology or not, that's to me almost irrelevant when we look at wanting to find long positions, but be cautious around noon today Eastern, because again, we typically see a fall off after the Fed, and it's going to depend on how clear they are in the statement and in the Q&A regarding their future plans for the bond buying program. Okay, gang. So caution day. Okay. All right, gang. I'll see you tomorrow. Same time, same station. Thanks as always for your time. Be good to each other.